Welcome to the channel. Don't forget to like and subscribe. Today we're going to talk about what is an insurance claim. An insurance claim is a claim from the insured party due to a contract agreement with the insurance party to guarantee the payment of compensation as long as the premium payment has been made by the insured party. Simply put, a claim is a formal application submitted to an insurance company to make payments to the beneficiary. For example, when someone dies and that person has life insurance, the beneficiary can file a claim. If all administrative requirements are met, the insurer will carry out its obligations to pay dependents to their beneficiaries according to the agreement listed. Insurance claims do not only apply to life insurance, but also other insurances such as health insurance, education, and so on. How an insurance claim works. A paid insurance claim serves to indemnify a policyholder against financial losses. An individual or group pays premiums as consideration from the completion of an insurance contract between the insured party and insurance carrier. The most common insurance claims involve costs for medical goods and services, physical damage, loss of life, liability for the ownership of dwellings, homeowners, landlords, and renters, and liability resulting from the operation of automobiles. For property and causality insurance policies, regardless of the scope of an accident or who was at fault, the number of insurance claims you file has a direct impact on the rate you pay to gain coverage, typically through installment payments called insurance premiums. The greater the number of claims that are filed by a policyholder, the greater the likelihood of a rate hike. In some cases, it's possible if you file too many claims that the insurance company may decide to deny your coverage. If the claim is being filed based on the damage to property that you caused, your rates will almost surely rise. On the other hand, if you aren't at fault, your rates may or may not increase. For example, getting hit from behind when your car is parked, or having siding blow off your house during a storm are both events that are clearly not the result of the policyholder. However, mitigating circumstances such as the number of previous claims you have filed, the number of speeding tickets you have received, the frequency of natural disasters in your area, earthquakes, hurricanes, or floods, and even a low credit rating can all cause your rates to go up, even if the latest claim was made for damage you didn't cause. This is the function of insurance for you and your family, so you don't have to worry about carrying the burden of that risk. Insurance play a role in taking over from your risks by paying a premium. As long as you pay the premium, the risk will shift to the insurer. You could say insurance is a profitable long-term investment for its users. Insurance claims are one of the rights that customers must receive as long as they routinely pay insurance premiums. Here are the goals and functions of insurance claims that you should know. The first one, risk transfer. The purpose of this insurance claim is the most important. Transfer of risk means that the insured party is aware of the threat of danger in the short or long term to his life or property. If the threat becomes reality, you will suffer losses and will feel the burden of risk that can occur at any time. Second, payment of compensation. The next function of insurance claims is to pay compensation. If you experience an event that causes a loss, for example, a fire in your house, the insurance will compensate for the loss according to the premium you choose. It's just that every insurance has a limit of dependence that can be given. Although the loss is not reduced by 100%, your financial burden will be drastically reduced. That is all from me. Welcome to the channel. Don't forget to like and subscribe. Today we're going to talk about 3 misunderstandings about insurance. When the COVID-19 pandemic occurs, it is very important to have additional protection such as insurance. Even though the public's sense of trust and awareness of the importance of insurance is still too minimal. One of the causes of the low level of trust in insurance is that there are still many misconceptions about insurance circulating in the public. There are many misunderstandings about insurance that spread quickly by word of mouth, even though what is stated has not been proven true. Here are 3 misconceptions about insurance that are often circulated in the public. First one, expensive insurance premiums. Many people consider insurance premiums as expensive, whereas the nominal premium for each individual is not the same because the nominal premium is determined based on several factors, such as age, gender, health condition, and lifestyle. In general, the younger a person's age, the nominal insurance premium will be cheaper and vice versa. The older a person is, the more expensive the insurance premium will be. This is because the determination of the nominal premium is based on the conditions of each individual and their needs. If you are in good health and have never suffered from any disease, it is likely that the premiums to be paid will be more affordable. So it can be concluded that the nominal premium is not always expensive and relative because it refers to various aspects. Second, assuming insurance is the same as savings. People often expect to get savings results from the insurance premiums they pay every month. If we look at the basic concepts of insurance and savings, then this assumption is not correct. The reason is, first, insurance aims to provide protection to a person from unexpected financial risks, so that financial goals can still be achieved despite experiencing risks in the course of time. While savings themselves have various purposes such as savings, emergency funds, and others. Furthermore, insurance can be withdrawn or used to protect a person when exposed to financial risks, such as critical illness, accident, and disability, so that it is not expected to interfere with other financial goals such as buying a house, children's education, and retirement funds. By looking at the concept above, it can be concluded that insurance and savings are different financial instruments. This is because insurance does not function to prepare funds to achieve financial goals that can be taken for granted by customers. But insurance is here to provide protection and a sense of security from financial risks that have the potential to cause big losses. Third, claims must be accepted. Many people assume that any claim they submit must be accepted, even though this point is not quite right. Please note that when someone submits a claim to an insurance company, there are several things that become the basis for making a decision whether the claim will be granted or rejected. In general, there are 3 factors that form the basis of decision making. The first is pre-existing conditions. If someone submits a claim that turns out to be in a pre-existing condition or conditions that existed before having insurance, the insurance company is not entitled to pay the claim. The second is the waiting period. Let's take an example. If someone submits a claim for cancer that is still included in the 90-day waiting period, then they can only file the claim if the 90-day waiting period has expired. If the cancer claim is submitted before the waiting period is over, the claim will be rejected. One important thing to know is that the claim will also be rejected even if it is submitted after the waiting period is over if the cancer is related to a pre-existing condition. Third one. The third one is an exception. On the exception, each insurance company has different points. If we take an example, if someone files an injury claim caused by a criminal act or crime, then the insurance company is not entitled to pay the claim. So those are 3 misunderstandings about insurance. Be sure to look at these things before deciding to open an insurance account.